Have you ever bought a vehicle that was salvage or rebuilt title and you tried to get insurance on it and then they denied you for some reason and then you had to go shop around for other insurance? Pain in the butt. Today we're going to talk about insurance companies that do and don't insure salvage vehicles and the difference between the four different levels of titles that you can purchase and how the insurances will react to those. So let's start off at the bottom. The lowest and the worst possible purchase that you could make, which you will know if you make this one, is a unrepairable title. That means the car can never be driven as a vehicle on the road. It can't be rebuilt. Nothing can be done with it. It's parts. You're not going to usually take that vehicle and try to fix it. Typically what people will do with those cars is they'll make them into like drag racing or dune buggies or some sort of like toy. Maybe they'll even get it so that they can drive it in those car derbies and you can just run it into another car. So there's the reasons for having those. Other people will buy them just to have the parts for other cars. The second piece and the next level up is a salvage title. And that's probably what made you click on this, but I question whether you're going to do this part or the next piece, which let's start with the salvage title. So salvage title means that most likely an insurance company has deemed it unrepairable. They can't fix it, but they didn't title it as unrepairable, which means it can be fixed and it can go back on the road. Salvage title is the first step where the company, a junkyard or somewhere, is going to have that vehicle and they've just stamped that title where you're not supposed to drive it. It's just kind of could be parts, kind of could be fixed. It's really up to the person that owns it at that point. Now, when they turn that salvage title into a rebuilt title, then that's where the insurance starts to kick in and say, okay, we might actually look at this. So a rebuilt title is where you've taken that salvage, you fixed the problems that it had, and now it's insurable. We're going to dive in here in just a moment to explain why some companies don't insure those. And we'll go over, I'll actually even explain to you some companies, give you some names of companies that do insure those types of vehicles. The clean title, it's the easiest thing. It's like you bought a car brand new. It doesn't matter. They don't know the difference between whether it was damaged or not as long as it wasn't reported. So if the car's been in a major accident, but it never was paid out from insurance, or they never claimed it, then it's typically going to still have a green title or a clean title, as they say. So you still have to be a little bit careful if you're car shopping for those types of vehicles, just to make sure that they haven't been in a major accident. Most of the time not. Most people are pretty truthful about it, but that's where you have a car that just hasn't had much damage. So that was the biggest part I wanted to point out, was the difference between the salvage and the rebuilt. Because insurance companies, they use the word salvage, but they're really talking about rebuilt titles. Most and no company is going to insure a salvage title because the car hasn't been repaired. And you're going to find a lot of flack or trouble, a lot of pushback from insurance companies when you have a rebuilt vehicle. Because what happens is there's not a set standard to the repair on that. So there's not a way for them to check and determine, oh, well, this was fixed by Joe the Builder. And Joe the Builder is 100% certified. He's A grade. He's ready to go. Everything he builds is great, top quality. Because it technically could have been built in a garage to the standards. As long as the parts are functional, then it could be stamped as rebuilt. That's why some insurance companies are a little bit scared to insure those, is not that they don't trust a certification that you're going to give them or some sort of proof that it was rebuilt, is they don't trust necessarily that the state has put the right qualifications into place where they can stop you from not having it functional to the part where it won't break in 3 years or in 5 years, that they won't be just falling apart. And it's going to be a liability claim that they're going to be forced to push out. If you're not looking to do full coverage, the collision portion on the insurance, you're 90% of the time going to be okay. Even though some companies still say, no, we won't even touch them, period, they will usually allow you to have liability insurance. So if you're not looking for that collision piece, I think you're going to be fine with most any company that you're with now. Some things that you really have to look out for: definitely make sure that you know the value of the car, especially if you have it rebuilt. If you're going to get it reappraised, that may not be something that you want to do. Most people don't. But if it's something that you are able to do and you can get the value of that car, make sure that the insurance company knows that, especially if you have a claim. Because what happens is, if you look up the reports and all of the articles about salvaged vehicles and their value, is you're going to find, according to Kelley Blue Book, KBB.com, that they estimate that the value of a salvaged or rebuilt titled car is about 20 to 40% less than the value of its predecessor, which has not been in an accident. That just simply tells me that it might not be worth it in a value standpoint. If you're trying to get a really nice car for a lower cost, you're okay with it being rebuilt, you might know the guy that did it, or you trust the person that's selling it. The problem that you're going to run into is it's not going to have as much value as you think it will. So if you do get in an accident or have to file a claim on it, you may not get as much money back as you thought. So after digging in a little bit, I did a couple research pieces on here, and I found a couple websites that did come up with some really good data where they did recommend, and I've not run across this myself because I've done a lot of salvage vehicles in the past, but I've never actually had this required. So I think this is an old piece that they're asking for, but typically they're going to want some sort of mechanical proof that a mechanic that's licensed has certified the vehicle, has repaired it, and it's good to go. They're also going to want the actual title in most cases, so they want to see that it was a rebuilt title, because you're typically going to have to call a DMV if you're doing this by your own, and you're going to have to get that certified that it's ready to go roadworthy. It's been tested. And lastly, they may ask you to take photos of your car. That's pretty common, especially if you're in Florida. They do that in most insurances anyways, where they want to see if there's any scratches, any major damage. Did you not put the body back on, but the parts work? They want to make sure that if you have an accident, that you're not just insuring it to have a false claim. Or maybe you're just a good person and you're like, okay, that's fine. I'm going to insure it. I know there's no good body on it. It's scratched, it's dented, all of that. Well, the insurance company still has to insure that amount. They're going to want to know that they have the right value set in place, because they're going to subtract the cost or the value of the repairs on that. So if you have a $10,000 car, but it's all banged up, it might be about $4,000 worth of body work. They're only going to give you on a payout that $6,000 back. It's one of those things where the insurance company is just going to let you do it, but they're going to subtract that value out of a full replacement loss. So if you totaled the car, just know that you're not going to get as much as you wanted back. Now, there are a few companies, and they usually don't work in the salvage and the rebuilt title zone, but I believe Hagerty is one of the companies. I've worked with them for years. I'll have to double check. Maybe if you're filling out a quote from us, I'll let you talk to an agent, because they actually have Hagerty there. But they usually do custom vehicles. So even if you can't salvage it and you're going to use it for that toy purpose, you have that option. But they also do what's called agreed value, where it's not what Kelley Blue Book and NADA and all of those car companies say the value of the car is, because that's the retail value. That's the actual cash value. It's what the car is worth today. If you had an accident today, that's what they're going to pay you based on. The replacement or the agreed value means you set a dollar amount, where you and the insurance company agree that up to $12,000 or $8,000 or whatever you guys choose, it's going to be covered for that amount. So if you get a salvage car and you think that you're going to drive it less, it's more of a unique situation that you would use that company, because they're more designed not for the everyday use. It's more for some of those classic and specialty vehicles. That being said, let's jump right into the companies that I've worked with and some companies that I found online that will work or say they work with salvage vehicles or the rebuilt titles. AAA is the first one, and I really like them, especially if you're in an area that you're looking to bundle the home insurance with it. They work really well with homes, mainly because if you have an older home, they don't care about any of the main stuff. The piping, where most companies care about piping and all of the special materials. I'm not going to go over that part of the video, but I'll link another video up here where you can see just some of the recommendations for home insurance and why you would combine that with your auto. Allstate Insurance actually does that, and I've done a couple of videos on Allstate. Don't love them, don't hate them. They're kind of like that in-between company where they're large enough to be successful, and a lot of people like to go to them. They're kind of a name brand, as you could say. They're one of the companies that says on their website that they do offer that. Same thing with Geico Insurance, and then same thing as State Farm Insurance. Progressive, who in 2020 I named as one of the top or best insurance companies to go with, mainly because of their fit for most people. They're a larger fit for larger groups. They're good if you have tickets, if you've had any issues, any specialty things. They're just overall been a really great company to work with. I will link that video if you want to watch that up above. And then also the reason I chose them is they also offer the home insurance. Similar to State Farm and Allstate, you're going to find that they're going to be a really good fit. also be competitive on the price. And the last honorable mention in this, which is not the end of the road, there are tons of companies that will insure rebuilt and salvage titles, but Safeco Insurance. They're owned by Liberty Mutual Insurance. They're, in my opinion, one of the better buys because they're one of those high-level companies. Because they're owned by Liberty Mutual Insurance, they hold that name brand. They've kind of created a separate company. I'm not to go in why or what the whys and whats of their separation of having two different companies, but you'll find that most companies do. Allstate has Esurance, Progressive has Progressive Direct, State Farm has, I believe, Titan Insurance. You'll have to correct me if that's wrong. But each company usually has their sub-companies, and their sub-company is Safeco. They've done really well, and they're really good at having those extra benefits. So if you're looking for kind of a higher-end policy, Safeco is going to be the route to go. Now, if you guys are interested, if you're looking at this and you're shopping around for companies, I'll put a link in the description below. You can fill out a quote. It's only going to ask you for one of the vehicles. It takes about a minute to fill out, and then you're going to have an agent contact you that'll get some more of the details and find out if you're a good fit. Overall, researching how to insure a salvage car or a rebuilt title is fairly simple. You just really have to call around a couple different companies unless you're working with a specific agent that knows what they're talking about. It's one of those things where it doesn't happen that often, but it does occasionally come up. I would say probably about 5 to 10% of the year, I might get those questions where like, okay, we plugged a car in and it just denied it because it knew it was a salvage title. The customer didn't know, and I didn't even know at that point until it happened. And so at that point, we have to get approval from an underwriter in some cases. Other times, they don't even care. As long as you've got it plugged in, it says salvage, you're telling me that it's in good shape and it's drivable, we're typically going to insure something like that, unless there's any red flags that pop up. Let me know in the comments below, have you guys had insurance on a salvage vehicle before? If so, let me know what company and how well they did for you. I'd be curious to see what companies have done great, or if you've had a bad experience, let us know and kind of give other people a warning. Maybe there are some companies that they should stay away from. Anyways, guys, I hope you liked this video. Don't forget to thumbs up, subscribe if you want more of this content. I'm Mark with Think Insurance. I will see you in the next one.